Hello there everyone, and welcome to this special presentation today titled A Prudent Approach to Navigating Market Trends. My name is Steve Chappell, the Director of Trading Systems Development here at VectorVest, and boy, I tell you, I've been using this approach to the stock market for myself for more than 15 years now. Hard to go all the way back and pin down a date, but it was, somewhere along the lines of 15 years ago anyway, when Dr. DeLito approached me and we worked together on putting together this technical analysis arrangement that we felt would be a good middle-of-the-road, moderate approach to knowing when it's okay to be buying stocks, when it's not okay, when to launch a campaign, when to think about shutting one down. And it's stood the test of time. I mean, it's really been a great model. So let's take a look at the model. First things first, need to know just a little bit about how it's constructed. Then we'll get to where the rubber meets the road, and that's how does it work and what's history look like, and thereby what the future should hold, right? So it's DEW, titled that way because that's the contents of the three different kinds of technical indicators that we're going to be using that encompass this technique. Number one, the D is for detrended price oscillator, and we are using a 20-day look back. All of this is going to be an end of day signal, so we're using the daily bar as our look back periods. On number two, it's envelopes. And envelopes are a measure of volatility around that asset, okay? We're going to be using just a standard 10-day look back approach here, kind of an industry standard with 6% offset. So you'll have a moving average that runs through the middle of what's called the two envelopes, an upper and a lower band, if you will, each of them being 6% off of that moving average. And number three, the weighted moving average, which assigns a lot more weight to the most recent data. So it is quite a bit more reactive to the more recent data than simple moving average, not quite as reactive as the exponential moving average. And the reason is the way the weighting is assigned. So in a look back period of 30 days ago carries a weight of 1, 29 days ago 2, 28 days ago 3, all the way up to the most recent carrying the most weight. So it's more of a linear progression of weighting. The exponential jumps right towards the most recent data and much more heavily weights that. Right? But that's how it's constructed, these three indicators. We do put on a fourth just as a heads up, and that is in the enhanced version in your product, and that is a MACD. It often precedes signal and gives us a warning that signal may be afoot, coming within the next few days to few weeks. So let's jump right in, look at it, see how good this might fit your particular mindset and mentality. Again, best geared for, I'd say, really even aggressive to prudent, kind of walking both spectrums, if you will, where the confirmed call, for example, more prudent to conservative. So this comes in advance and still does so at a reasonable clip, not trying to get too pinned down to nailing the tops and bottoms, but doing so a little bit more effectively. So let's jump right in, take a view. All right, so here we are at the home page, and to get there, pretty simple. We can just go right up here to the timing tab. From there, market timing graph. And once this populates, I've already got it on here, but over here on the right, should yours not have it yet, you can choose from the layouts, and we have the ProTrader Timing DEW, which is the base system itself. We also have the enhanced ProTrader Timing that we might look at a bit later, just because it adds, when I click on it, the benefit of the MACD at the bottom here. Okay, so start with the base system. We talked about the three indicators, the D for detrended price oscillator, that's the indicator down here at the bottom. As mentioned, it is an oscillator. It hovers above and below a center line, which is set at 0. And there are many interpretations, of course, but the way in which we use it in just this timing model, which is all we need to discuss, is it's bullish when we start moving up above 0, and it's bearish when we start moving below 0. And we use this as our confirming indicator in this setup. Okay. The E is for envelopes. As we look at price up here, price is staying within a lane. Think of it like a traffic lane, right? The lanes are set if you can imagine a exponential moving average running through the middle here, they're set 6% above and 6% below that exponential average. So what we're looking for here are situations where price goes to extremes. And when that happens, we have a bit of a different rule set, and we'll come back to that a little bit later. But we like to get a bit more reactive to signal sooner when price goes below or above. We have never seen price go above the upper band. But on markets when they really have some kind of a black swan / really negative climate, they can really shoot down the page pretty quick. And there have been instances in the past where price has gone below the lower band. Okay. Then finally, the W is for weighted moving average. That's this white line running through the middle of price here. So quickly, we'll talk then about signal and how it's generated. We'll start with the most recent because that's what we should do. So I'm going to come down here to the bottom. You'll notice you have a selector. I put DEW on here. That populates the green and red triangles. A green is obviously a bullish signal on the stock market in this case, because we're looking at the stock market. Now, this is built exclusively for the stock market. It was geared towards doing just that, timing the markets. Okay. This signal was generated because two things happened. That is, price closed above, let me zoom in, price closed above the weighted moving average. And on the bottom here, the DPO had moved into a positive position, confirming that price action. All right. So it's a lot like the buy-sell ratio in our confirmed calls in that it takes a little bit more. This is usually the second of the two-part signal to occur. Not always, but vast majority of the time. You're going to be waiting on the DPO to confirm the price crossover. Just like here, price crossed a day earlier, then the DPO got positive. Okay, but that's signal, and it remains bullish until just the opposite occurs, which is price goes below the weighted moving average, as you see here, and the DPO confirms that by working its way below zero. Okay, in this case, they happen, I believe, on the same date, right? Now, there are exceptions, but that's pretty simple, hopefully. Hopefully everybody's following along just fine here so far. There's one exception. As we mentioned, you could have a band violation where price runs away so dramatically that you don't necessarily want to wait for both indicators to confirm we're now moving the other way. So if we drag back enough, in this case all the way back to COVID, for example, I think is the last time this happened. I might be missing one somewhere, but this is a classic case, okay? And it's very depictive. So let's look at it. So price on the back of COVID, obviously, markets really went on the slide, so much so that they even hugged the lower band on the way down. Eventually, though, it's like stretching a rubber band. Prices, and you can see even here, it jetted back towards the middle. So how do we get in quickly, more quickly off this extreme market low without taking on too much risk? From a prudent standpoint, remember, maybe edging towards aggressive a bit because it is faster than our most prudent to conservative system. And by doing that, kind of avoid situations where you have a bit of a bounce only to go lower. That's the challenges we're talking about when constructing this type of thing. So what we wait on after an envelope violation like this, we wait on one of the two-part signal to occur. In most cases, that's going to be priced through the moving average, as we've already illustrated. So your signal date is here because price closed at the high of this range. It's an unfilled bar, right? We closed at the high there, which is above the weighted moving average. We don't wait on the DPO here. We would have had to wait another 1, 2, 3, 4 days, for that to occur. And those 4 days can really mean a lot when you're coming up off an extreme low. So that's how this works. Again, I can't remember a time, and I'm just going to say I don't believe there's ever been a time where we've gone above the upper band. Okay, and you can look back on this chart and see it's going to be quite challenging for for prices in the stock market to rise at some point as fast as they went down in COVID, or on the New York City attack, things of that nature. Those are the kinds of instances, financial crisis. Those are the kinds of instances that have created the lower penetration of the lower band. So it takes an extreme event, to get that done. So that's how it works. The beauty of this is that the name of the game is buying low and selling high, right? So we want to try to develop something that reliably picks a market low and reliably picks market high points, without too much back and forth, without too much what technicians call whipsaws. And this system is one of the best I've ever seen, certainly, at doing just that. And so we're trying, this is where the money is made. When a bull signal comes in, market goes on a run, which it does on most occasions. And some of these look like, short runs. Everything, when you start going back and looking historically, can be a little skewed in terms of how valuable all of that uptrend sometimes actually is. So, it's often a good idea to kind of zoom in. Yep, that was a good entry on the market. Good time to exit. Markets went exceedingly lower pretty quickly there before regaining strength, getting signal again. And what I like to do is just kind of right hand edge this thing, walk it up, get a feel for it historically. So here you have price going below the weighted moving average. We don't have signal yet because the DPO is still positive. It's saying, no, we're still kind of on uptrend here, and now it comes in, okay? The danger is when you start getting so reactive to just this, you start really increasing that frequency of signal and you have much more back and forth. So we're trying to avoid that as much as possible, right? The real key is it does a good job at getting us in from a moderate perspective off these lows, and by nature of that, it also then does a good job of hanging in there through some turbulence to get you onto much higher prices without having to stop and reverse and getting overreactive to the market. You can see here with COVID, very quickly got us well out of harm's way for the vast majority of that. Didn't nail the bottom to the 2 or 3 days, right? We have other systems that can do that, but there's a lot more back and forth, And so it did a really good job at getting us in there awfully low, though, didn't it? And really a lot of good work could have been done here. There was no signal back and to exit campaigns until you got into October. That was a pretty rough patch there. It looks pretty mild right now. That was pretty rough time in the market if you weren't careful. There was a slight little updraft here. Markets kind of turned over on us and then bang, So you get if you're going to pick a system like this, you just got to truly follow it and trust it. Lead the jockey club here at VectorVest, and there was a lot of worry and concern about some of the reports that came out today, and the markets, on those 1 minute and 5 minute charts, they really start looking like they're diving. You just got to go with it. Markets don't move up in a straight line, don't move down in a straight line unless it's like COVID, which even that didn't move down in a straight line, right? So we've just got to, the nice thing about this is it takes all of the guesswork out. You just follow what it tells you to do. And until we see a red triangle here, we're going to keep our campaigns running. Even if we see some sticky inflation readings and things like that. Let's see how this market continues to roll out, and let's see if a down signal actually comes at some point in the future. You can see even this one does go back and forth a little bit. I'm going to give you some coaching here. One of the things that we talk about at VectorVest quite a lot is follow through, right? And so you can see here, for example, there was a down call, and the next day the stock market did what? It went up, right? So this is an end of day signal. That means that you're not going to be reacting to it, or shouldn't, particularly when you're brand new, but really for everyone, shouldn't react until the next morning. And that's when you feel at some point during that first half hour or shortly thereafter that the market is continuing to fall, and feel like the market's going to finish that way. Want to see the index is down 1% or more, that kind of thing. Or closer to the end of that day, if you're still lower, get as assured as possible that you're following through on that signal. Here it did not, and so there was really no need to even shut down the campaign, essentially, that you were already in, unless you just wanted to recycle it, because it just kept clicking. And so while the signal populated, it didn't confirm with price action the next day. That follow through is important. If we go back here, there's going to be times where even follow through is going to feel like it's not working to your benefit, but it really truly is. So like if we start here, did the market follow through the next day? Nope. It actually opened higher than we closed the prior, okay? Just like the other time. And so there was no real need to shut down until we got here. Now markets didn't go a lot lower, but they at least flattened out, right? We get here, not real good confirmation. So, there's some work that can be done through here to minimize your activities. If you're not sure about what I was just talking about right there, and if that didn't make sense to you, then just blindly follow the signal. Because if you do that, you're always going to be in great shape. Okay? So, bottom line, when a signal comes in, you can go long the following day. When the signal comes, you can go short the following day. Just sometimes realize you might have to reverse it the very next day if you're going to do it that way. Understand? Okay? But you can do it either way, and either way is going to work really, really, really well. It doesn't matter which way you decide to go. One's just going to save you some activity, for the most part. Maybe just a day's worth of heartburn, for example. So either way you want to go, you're going to be in good shape here, and I can attest to it. It's something that I've used a lot, particularly for option trading, because I like to buy a significant amount of time, typically when I'm doing my long calls off lows, for example, and so forth. So it just fits well with kind of the 3 months that I like to buy and so forth, on average. You can see signals here generally are about maybe 3 and change in length on average. I'm talking about months. There's obviously going to be some times where they're a little quicker, and then there's also going to be times where they're a little longer, right? But that's in essence, every several months you're typically getting a signal here. It's by that nature really a pretty good system for a lot of folks. All right, so we also have some automated systems in VectorVest that feature this timing list. So if we come over into viewers and go to trading system viewer, one of the things you can do in here is you can sort by market timing. Oops, and I got to tell you, if we scroll down here a bit, a lot of these systems are doing pretty well. Look at this. Your 1-year returns are pretty good almost across the board. Now, a couple that I would highlight, because I really like the stock picking methodology here, tied into the frequency of signal with the DEW. Midas touch stocks, these high momentum stocks, tend to really jive well with that kind of temperament on your market timing. And so this Midas touch RT descending is one to certainly think about. Even in this current market condition, it's done really well over the last year. It's hanging in there over the last 3 months pretty well. And a lot of the good work has been even over the last month, for example, which makes some sense. Market's kind of heating up right now, right? And so if we go back here, I would also say this. That's a long only. You also have some short onlys, like with Pirates 50-15. Marrying those two ideas together is food for thought. So when you have the DEW up, you go to your Midas touch list, take the top RTs, and away you go. And when you get a DEW down, you can look at the Pirate short strategy, which tends to be a really good performer, just all in all, and works really well with the DEW, looks like, over the last month, 3 months, 1 year. So if you're up to being able to do short positions, that could be something of interest. All right, now, if you want to know a little bit more about these systems, you can always click on Trading System Details. When we do that, you'll have a nice little blurb up here at the top. Okay. Exit positions when the stock goes from a buy to a hold or when there's a DEW down. Pretty simple to follow. Right. All these stocks, when you pick them, will be buys. So if it goes to a hold, not even a sell, you just kick it out. And that gives you pretty steady upward performance, which is great. So you got Positive, 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 positive. Everything's green. And maybe the best news is pretty steadily, the numbers get better. There's this year to date and 1 year that are about the same, but we're not very far into this year, you know? So it's actually starting to pick up a little bit of current momentum. And of course, your all-time is pretty solid here. So it's one to think about. Looks like there's a lot of mining in here, and that should do well. Lifeway Foods, you guys heard about that stock, Mike? And this Vital Farms, wow. You know, they've really been on a tear. So anyway, that's about as far as I want to go into it. Give you some options right in the tool. You can just, you know, follow this thing. So I could paper trade it, just follow it. And just see how she goes for a little while. And if I want to participate, of course, you could think about doing that. Also, I want to throw this at you. This one uses the Midas Touch. So if I right-click, view a stock graph, over here on the right, we have this Midas Touch layout. Some of you might wonder how the Midas Touch stocks are populated on your homepage and everything, for example. Well, you know, this was developed to help time the gold market and everything, and it works really well, and it uses moving averages, you know, to really get the job done. And it does so on both price up here at the top along with RT. So if I come over to the right, you can see you got a 10 and 65 on, I'm sorry, stop price up at the top. Not price itself, but the stop, the adjusted moving average that we put out there for stop. And then at the bottom, we've smoothed out RT, or you know, that's the idea here, with a 40 period average, right? And then we just like to buy them as they're hitting 3-month highs. So really, and RT needs to be above 1. So you started, if we go back here just a little bit, I can see RT's getting above 1 here. Are the moving averages at a new high? Not quite yet. The green one is. And as you start to get into here, everything's bullish. And we'll see how the trades go. That's the idea. So all of the moving averages hitting the new highs and the RT 40 average above 1. Now look, Jerry's doing a very special thing with moving averages here next week. And so I want to bring some good attention to that. It's called How to Master Moving Averages. And of course, Jerry, again, is going to be the ringleader here. And if you're interested in learning more about moving averages, they can be used in many, many different useful ways. Not only entering, but even exiting positions, giving insights into the strength of momentum, and maybe momentum is weakening, and just a lot of great usefulness. And that's www.vectorvest.com/MMA register. So vectorvest.com/MMA register. That'll take you to this page here. And in there's a whole slew of potential offerings on Tuesday and Wednesday of next week at different time frames. Just select the one that's best for you, sign on up there, and get involved. And if for some reason you happen to miss it, these are recorded, and you would receive a recording of the information whether you're there or not, actually. So it's a terrific thing to think about because it can do you some good work. That's it for today. Hopefully you get a lot out of this. I really think if you're more of a prudent-minded, maybe even slightly teetering towards aggressive, having just a little bit of aggressiveness in your bones, this DEW has been dynamite and should certainly be something to consider. And I didn't get into the MACD aspect of it. The MACD is not part of signal. If that histogram starts to turn bullish, you can pretty well bet that the DEW up call is just right around the corner, and vice versa. If the MACD starts to turn bearish, just the standard settings on the market, you can pretty well bet that either on that day or in the next few days to few weeks, just depends, that signal's coming. So you just start looking for it, All right, guys, thanks for tuning in this week, and we'll see you back here again next week. See you soon.